Hey everyone, just 2 days after Russia invaded Ukraine, the United States and the European Union made a decision that would change global finance forever. They cut Russia off from SWIFT. Now, SWIFT is the nerve center connecting 11,000 banks across 200 countries, processing $5 trillion every single day. Overnight, Russian banks were thrown into darkness. They couldn't send or receive international payments. Trade finance disappeared. Cross-border business ground to a halt. It was complete economic isolation. The West called this the nuclear option of financial warfare. The thinking was that Russia's economy would implode, the ruble would crash, and Putin would be forced to either withdraw from Ukraine or face a revolution at home. But fast forward to today, and a very different reality has emerged. Russia didn't collapse. The ruble stabilized and even recovered. Russian trade didn't stop. It just found new routes, new partners, and new systems. Russia discovered alternatives. And what's even more concerning for the West is that dozens of other nations were watching this whole thing unfold, and they started building their own escape routes from the system. Because they realized, if the US could kick Russia out of the global financial system for political reasons, then any country could be next. This isn't the first time financial infrastructure has been turned into a weapon. It's actually happened 4 times in the last 110 years. And every single time, the exact same pattern plays out. First, a dominant power controls the system. Then, they use it as a weapon against their rivals. The targets scramble to find alternatives, and all the neutral countries, watching from the sidelines, start hedging their bets. Slowly but surely, the original weapon starts to lose its power. The country wielding it thinks they have ultimate leverage, but what they're actually doing is destroying the very foundation of their own dominance. To understand why this SWIFT weapon backfired so spectacularly, you first need to understand what SWIFT actually is, and it's probably not what you think. SWIFT isn't a bank. It doesn't hold or transfer any money. SWIFT is simply a messaging system. Think of it as the secure text messaging app for the entire world of international finance. So, when a bank in New York needs to send $1 million to Tokyo, SWIFT is what sends the secure authorization message between them. The actual money moves through other channels, but SWIFT provides the essential communication that makes it all possible. It was created back in 1973 to replace the old, slow, and insecure telex system. By 1977, it was handling 10 million messages a year. Today, it's over 11 billion messages. A year that's around 45 million every single day. It truly is the nervous system of the global economy. So what makes SWIFT so powerful? Well, technically, it's based in Belgium and is supposed to be neutral. But in reality, its board is dominated by American and European banks. And the US has significant legal leverage because the vast majority of international transactions are settled in US dollars, flowing through New York. This gives America the power to pressure SWIFT into cutting off entire countries or specific banks. If you get kicked out of SWIFT, you're essentially quarantined from the global economy. The United States has used this weapon before. Back in 2012, it pressured SWIFT to disconnect Iranian banks. The effect was devastating. Iran's oil exports collapsed because buyers couldn't pay for them. The economy shrank by 9%, and inflation shot up to 45%. These sanctions ultimately forced Iran to the negotiating table, leading to the 2015 nuclear deal. On the surface, it looked like the SWIFT weapon had worked perfectly, but what was happening behind the scenes tells a different story. During those years of isolation, Iran was busy creating alternative payment channels. They set up barter deals, experimented with crypto networks, and increased non-dollar trade with countries like China, Russia, and Turkey. So when sanctions were reimposed in 2018, Iran was much better prepared. It survived because it had systematically worked to reduce its dependency on SWIFT. This experience in Iran was a critical preview of what was to come with Russia, and it holds a vital lesson about the limits of financial power. The decision to cut Russia off from the SWIFT system in 2022 was a seismic event. And not just for Russia. This wasn't some small, isolated nation. This was the world's 11th largest economy, a nuclear power, a major energy exporter, and a permanent member of the UN Security Council. Removing Russia wasn't just economic pressure. It was a declaration. It broadcasts a message to the entire world. The US-controlled financial system can and will exclude anyone for political reasons. Every country watching got the memo loud and clear. If you cross the United States, you risk losing access to the global financial system. Your foreign reserves can be frozen. Your banks can be cut off. Your entire economy can be choked. This forced a critical choice upon every non-Western nation. Do you live with this constant threat, this vulnerability to American financial power, or do you start building an alternative? Unsurprisingly, most chose to build alternatives, and that's the moment the swift weapon began to backfire. History shows us that weaponizing finance always backfires. It's a pattern that has repeated itself 4 times in the last century. Each time, the dominant power believes it holds the ultimate leverage, and each time, it only speeds up its own decline. Let's look at the first example. Great Britain in World War I. Before 1914, the British pound was the undisputed king of currencies. The City of London was the command center of global finance, controlling about 65% of all international reserves. But when war broke out, Britain passed the Trading with the Enemy Act. This allowed them to seize assets from German citizens and companies. They confiscated German-owned businesses, bank accounts, ships, and property all across the British Empire. This was a shocking move. Before this, finance and war were kept separate. Nations fought on the battlefield, but they always honored financial contracts. Britain shattered that norm. The immediate effect on Germany was devastating. German companies lost their assets worldwide. Their banks were locked out of London's markets, and their trade dried up. Britain thought this gave them a decisive advantage, but neutral countries were watching, and they learned a dangerous lesson. If Britain could seize German assets, it could seize anyone's assets. Any time it felt a conflict was important enough. Suddenly, your money in London wasn't safe unless the British government approved of your politics. After the war, these neutral countries started moving their money out of London. They diversified their reserves, buying more gold and opening accounts in New York, Paris, and other rising financial centers. The United States was the biggest beneficiary of this shift. New York banks started capturing business that used to go straight to London. By 1920, America held more gold reserves than Britain. By 1925, New York was a true rival to London. And by 1944, at the Bretton Woods Conference, the US dollar officially replaced the pound as the world's reserve currency. Britain's decision to weaponize its financial power in 1914 kicked off a 30-year slide from global dominance to relative irrelevance. The pattern is clear. Control the system, weaponize it, and watch as everyone else diversifies away, causing you to lose control. Now, let us fast forward to our second example, the United States and Iran in 1979. When Iranian revolutionaries took American hostages, President Carter responded by freezing all Iranian assets held in U.S. banks. We're talking about $12 billion. The largest asset freeze in history at that time. The justification seems straightforward. Iran had broken international law, and the U.S. was using its financial power to pressure them into releasing the hostages. But this act had massive, unintended consequences. All over the world, especially in the oil-rich countries of the Middle East, leaders had a terrifying realization. Their dollar reserves, stored safely in U.S. banks, could be seized overnight. Not by an army, not because of a default, but with a simple executive order. The President of the United States could freeze your country's entire fortune with a single phone call. The world learned that day that the safety of their dollar assets was not guaranteed. It was conditional. Did you know your country's money might not actually be yours? Imagine having billions of dollars, but suddenly, you can't touch a single cent. This isn't a hypothetical. It's what happened to countries like Iran and Russia, and it's changing the world's financial system forever. Let's go back to the 1980s. After the U.S. froze Iranian assets, a shockwave went through global finance. OPEC nations realized that their sovereign wealth was so sovereign if it was all in U.S. dollars, held in New York. This was a massive wake-up call. They started a quiet revolution, diversifying their reserves away from the dollar. From holding about 85% of their reserves in dollars in 1977, that number dropped to 71% by 1991. Where did the money go? Into German marks, Japanese yen, and gold. They opened accounts in London, Zurich, and Singapore. Countries like Saudi Arabia and Kuwait started selling off their U.S. Treasury bonds. This was the beginning of a slow, steady decline in the dollar's dominance. It continues to this day. Sure, freezing Iran's assets worked in the short term. The hosties were released. But, strategically, the U.S. showed the world that the dollar could be used as a weapon. America gained leverage over one country but lost trust from everyone else. Now, fast forward to 2014. Russia annexes Crimea. The U.S. responds with sanctions, but they're targeted. Almost. Hence, they banned some Russian officials from the U.S. financial system and placed restrictions on a few banks. But they didn't cut Russia off from SWIFT, the global banking messaging system. It was a warning shot, meant to show disapproval without pushing Russia completely out of the system. But this turned out to be a massive strategic mistake. Instead of crippling Russia, it gave them an 8-year head start to prepare for what was coming. From 2014 to 2022, Russia began a systematic campaign to de-dollarize its economy. They weren't hiding it. Putin openly talked about reducing their exposure to the dollar because it had become a weapon. How did they do it? They slashed their holdings of U.S. Treasury bonds from over $130 billion down to just $2 billion. They started hoarding gold, nearly doubling their reserves. They built their own version of SWIFT, called SPFs, and they struck deals with China, India, and others to trade in their own currencies, rubles, yuan, and rupees. All this time, Western analysts dismissed it as just talk. They thought Russia was too integrated into the global economy to ever truly break away. But Russia was deadly serious. And when the real sanctions hit in 2022, they were ready. The 2014 sanctions did slow Russia's economy, but they also gave them the time and motivation to build a financial fortress. In hindsight, the U.S. chose the worst possible path telegraphing its punch without landing a knockout blow. Then came February 26th, 2022. This was the big one. The US and EU hit Russia with a financial nuclear option. Major Russian banks were cut off from SWIFT. And, in an unprecedented move, $300 billion of Russia's central bank reserves held in Western countries were frozen. Russia was being financially isolated on a scale never seen before. The immediate impact was chaos. The ruble crashed 30%. The Russian stock market closed to stop a total collapse. People rushed to ATMs. Western media declared victory, predicting Russia's economy would crumble within months. But then, the unexpected happened. Russia stabilized. How did they do it? The Russian central bank jacked up interest rates to 20%, stopping the ruble's freefall. Then, in a brilliant move, Russia demanded that European countries pay for natural gas in rubles. This created a massive, artificial demand for their currency. Within just 3 months, the ruble had recovered all of its losses. What about trade? It just shifted. Russia started sending its oil to China, India, and the Middle East, settling payments in yuan and other non-dollar currencies. The world is learning a powerful lesson from these events. Relying on a single currency, controlled by a single nation, is a massive risk. We are witnessing the birth of a new, multipolar financial world, driven by the desire for economic independence. What do you think this means for the future of the US dollar? Let me know in the comments below. Everyone thought the Russian economy would collapse, but by 2023, its GDP actually grew 3.6%, faster than Germany or the UK. The real damage wasn't to Russia. The real damage was to the US dollar and the Swiss system. Why? Because every country watching understood that America would freeze reserves and cut off SWIFT access for purely political reasons. Imagine you're China, India, Saudi Arabia, or Brazil. You start thinking, okay, we're not at war with the US today. But what about tomorrow? What if a disagreement over Taiwan, Kashmir, or just a simple trade policy escalates? Could America freeze our trillions of dollars in reserves? Could they kick us out of SWIFT? The answer, after what happened to Russia, is a resounding yes. The precedent has been set. So, What did these countries do? Exactly what America's adversaries have done throughout history when faced with financial warfare. They started diversifying away from the dollar and building their own alternatives. This is where a predictable, five-stage backfire pattern begins to unfold. This has happened 4 times in history, and it's happening again right now. Let's break down this 5-stage framework. This is how financial weapons end up hurting the one who uses them. Stage 1. A dominant power controls the global payment system. For about 50 years, from 1973 to 2022, America effectively controlled SWIFT. Now, SWIFT is technically based in Belgium, but since most transactions are settled in US dollars through banks in New York, America has immense leverage. The US Treasury can sanction banks, and the Federal Reserve can cut off their access to dollars. Without US cooperation, SWIFT can't really function. So, America controls SWIFT because it controls the dollar, and the dollar is dominant thanks to America's economic and military might. This is the bedrock of financial power. Stage 2. The dominant power weaponizes that system for foreign policy. After 9/11s, America started using financial sanctions to target terrorist financing. This soon expanded to so-called rogue states like Iran and North Korea, and then to Russia after its 2014 actions. Each time, it normalized the idea of financial warfare. So when Russia invaded Ukraine in 2022, using the SWIFT weapon felt like the obvious next step. The infrastructure was there, the precedent was set, and the political will was there. So, America cut Russia off and froze $300 billion of its reserves. Stage 3. The target finds alternatives. Russia, locked out of SWIFT, had no choice but to find other ways. It expanded its own domestic system, called SPFS. For international trade, it heavily leaned on China's system, CIPS. They even used cryptocurrency for some transactions and simple barter deals for others. By 2024, a full 40% of Russia's trade was being done in currencies other than the dollar. Russia-China trade soared to $240 billion in 2023, paid almost entirely in yuan and rubles. Trade with India was done in rupees, and with the UAE, Russia proved to the world that you can be kicked out of the dollar system and not just survive, but adapt. Stage 4. Neutral countries start hedging their bets. This is the most critical stage. It's not just the sanctioned countries looking for an exit. It's dozens of others who are worried they could be next. China saw what happened to Russia and immediately hit the accelerator on its de-dollarization plans. It slashed its holdings of U.S. Treasury bonds from $1.3 trillion down to about $775 billion. It massively increased its gold reserves officially. It's over 2,200 tons, but unofficially, it's likely closer to 4,000 tons. And it expanded its CIPS payment system to handle over $500 billion in transactions. Even Saudi Arabia, a key U.S. ally for 80 years, saw the reserve freeze and started rethinking its strategy. In March 2023, they announced they would start accepting Chinese yuan for oil sales to China. This move single-handedly shattered the 50-year-old petrodollar monopoly. Then, in December 2024, Saudi Arabia officially joined the BRICS group, signaling a major shift away from its exclusive alignment with the United States. These are the first 4 stages of the backfire. They show a clear and accelerating trend away from the dollar-centric world we've known for decades. The 5th stage is where it all culminates, and that's what we'll explore next. The plot thickens, doesn't it? It's not just about 1 or 2 countries anymore. The UAE, a key Gulf ally, started settling trade with India in their own currency's rupees, and dirhams completely bypassing the dollar. Meanwhile, Brazil and Argentina are talking about a common currency for their bilateral trade. And then you have the BRICS nations, which have now expanded to 9 members, including heavyweights like Saudi Arabia, the UAE, and Iran. They're not just talking. They're reactively developing a shared payment system and even considering a common currency backed by real assets like gold and commodities. What's really fascinating is that even traditional US allies are starting to hedge their bets. The European Union developed a system called It was originally designed to trade with Iran, but the potential to expand it is there. Japan and South Korea are beefing up their holdings of the Chinese yuan. Right now, over 50 central banks around the world are either testing or implementing alternatives to their dependence on the dollar and SWIFT. This isn't some grand anti-American conspiracy. It's a rational, logical response. These countries saw what happened when $300 billion in reserves were frozen with a single executive order. They looked at their own holdings and realized, wait a minute, our money isn't actually secure. This brings us to stage 5 of the cycle. The original weapon starts to lose its power, and that's exactly where we are right now. Sure, SWIFT is still dominant, but the trend line is clear. It's declining. The dollar's share of global reserves has dropped from 71% in 1999 to just 58% today. That 13-point drop represents trillions of dollars moving into other assets. But here is the most stunning statistic. The dollar's share of international trade settlement has plummeted from around 73% in 2022 to about 58% by 2024. That is a 15-point drop in just 2 years. This is, without a doubt, the fastest de-dollarization we've ever seen in modern history. While SWIFT's message volume is still growing in absolute numbers, its overall market share is shrinking. Look at the competition. China's CIPS system processed 136 million messages last year, a 50% jump from the year before. Russia's own system, SPFS, is handling about 2 million messages every single day, just within Russia. India's UPI system processed an incredible 12 billion transactions this year, with a growing amount of that being cross-border payments. These alternative systems aren't just theoretical, they are scaling at an incredible speed. And this brings us to the key insight. The SWIFT weapon worked tactically in the short term. It sent a shock through Russia's economy, no doubt. But strategically, it was a catastrophic failure. Why? Because Russia survived, and now the SWIFT weapon can never be used again with the same terrifying effectiveness. Every potential target saw what happened and started preparing. Neutral countries built their own alternatives, making themselves immune to that kind of financial pressure. We've seen this pattern before. Stage 1. Create a system of control. Stage 2. Weaponize that system. Stage 3. The targets are forced to find alternatives. Stage 4. Neutral countries get nervous and start hedging. And finally, Stage 5. The weapon loses its power. This is the exact cycle Britain went through with its currency from 1914 to 1944. And the United States is going through the same cycle right now, from 2022 to roughly 2042. Now, let me show you the hard data, proving this is happening as we speak. These aren't predictions. These are facts on the ground. Let's look at Russia's trade data. Before the sanctions in 2021, 87% of its trade was settled in dollars or euros. By 2024, that number is down to 60%. That means 40% of its trade now happens in yuan, rubles, rupees, dirhams, and other currencies. Digging deeper, Russia's trade with China, which is worth $240 billion, is almost entirely settled in yuan and rubles. Its trade with India, worth $65 billion, is largely settled in rupees. Russia has become the living proof that a major economy can operate outside the dollar SWIFT system. Now, let's talk about China's CIPS system. Back in 2020, it processed about $12 trillion in payments for the entire year. By 2023, that number was approximately $27 trillion. It more than doubled in just 3 years. CIPS now connects over 1,400 financial institutions in 110 countries, all settling trades in yuan. This is a direct, functioning alternative to the dollar SWIFT network, and its growth is massively outpacing SWIFT's. Finally, look at where the smart money is going. Gold. In 2022, central banks bought a staggering 1,136 tons of gold. In 2023, another 1,037 tons. And in 2024, they're on track to buy over 1,000 tons again. We're seeing 3 consecutive years of record-breaking gold purchases, the highest sustained buying spree since the 1970s, which was right before the old Bretton Woods system collapsed. And who's doing all this buying? China, Russia, Turkey, India, Poland, Singapore, the Czech Republic. These countries are systematically converting their dollar reserves into physical gold. Why? Because gold is a physical asset. It cannot be frozen with a keystroke. It cannot be sanctioned away. They're moving away from what they now see as a liability and into an asset that offers true financial sovereignty. This isn't a future trend. It's the reality of the world we live in today. The world is quietly ditching the US dollar, and it's happening much faster than anyone thinks. This isn't some far-off theory. It's happening right now, and the evidence is overwhelming. Let's start with currency swaps. China has agreements with over 40 countries, worth about $500 billion. These deals let countries trade directly, using their own currencies, completely bypassing the dollar. Russia is doing this with China, India, and Iran. India has deals with the UAE and Japan. Brazil and Argentina are even talking about a common currency. ASEAN nations are doing the same. It's a global movement to sidestep the dollar. Then there's the petrodollar, the cornerstone of dollar dominance for 50 years. For half a century, oil was bought and sold exclusively in dollars. That monopoly is now broken. In the last year, Saudi Arabia started accepting Chinese yuan for oil. Russia sells oil to India in rupees. The UAE is taking dirhams and yuan. The petrodollar isn't dead, but its monopoly is. And once a monopoly breaks, the advantage disappears fast. And then we have BRICS. In 2024, the group expanded from 5 to 9 members. These 9 countries now represent 45% of the world's population and 36% of global GDP. At their last summit, they announced plans to develop a new currency, one backed by real things like gold and oil. The signal is crystal clear. They are building an alternative to the dollar system. So, the big question is, how long does the dollar have? To figure this out, let's look at history. The last time a global reserve currency was replaced was when the dollar took over from the British pound. In 1914, Britain weaponized its financial power against Germany. By 1944, just 30 years later, the dollar was officially crowned the new king. Now, Britain was also shattered by 2 world wars, which America isn't facing. So maybe the dollar's decline will be slower. But today, technology changes everything. In the early 1900s, building a new payment system took decades. Today, China's CIPS system more than doubled its transaction volume in just 3 years. Digital systems can scale at lightning speed. My estimate, based on history and modern acceleration, is that the dollar has 15 to 25 years left as the undisputed world reserve currency. That puts the turning point somewhere between 2037 and 2047. It won't disappear, but its dominance will end. The dollar's share of global reserves might fall from 58% today to around 35%. We're heading for a multipolar currency world, with the euro, yuan, and gold all playing bigger roles. The trend is already in motion. The dollar's reserve share has been steadily falling. At the current rate, we're looking at a major shift within 1 or 2 decades. So what does this actually mean for you? Right now, the world's need for dollars lets America run massive budget deficits, essentially borrowing trillions at low interest rates. We can import more than we export and pay for it with printed money. It's the ultimate free lunch. But when dollar dominance fades, that lunch is over. Foreign countries will stop buying US debt, interest rates will have to spike, and America will be forced to balance its budget. The standard of living, built on this financial advantage, will face a major reality check. In this new world, there are clear winners and losers. China wins, big time. It's the obvious successor, with the world's largest manufacturing base and its own growing payment system. As the dollar weakens, the yuan will rise. Russia also wins strategically. By surviving sanctions, it proved to the world that there's life outside the dollar system, destroying the myth of America's financial invincibility. And all the BRICS nations, from Brazil to India to Saudi Arabia, gain more autonomy and can play the world's powers off each other. Gold wins to us. Central banks are already buying it at a 50-year high. The biggest loser, of course, is the United States. Not a catastrophic collapse, but a gradual, irreversible loss of hegemony. Without dollar dominance, the unlimited borrowing, the powerful sanctions, and the ability to live beyond our means all begin to fade. America doesn't become poor, but it becomes a normal country among others. Europe, having tied its fate to the US, loses as well. The financial world is being remade before our very eyes. This isn't a crisis for tomorrow. It's the reality of today. For decades, we've lived in a world dominated by the US dollar. But what if that era is ending? Not with a bang, but with a quiet, systematic backfire. It all starts with something called SWIFT. When the dollar's value drops, you might think the euro would rise to take its place. But that's not what's happening. Instead, the yuan is gaining ground, and Europe is finding itself economically squeezed between the US and China. The key to this shift is SWIFT, the global financial messaging system. Though SWIFT is a Belgian company, it's widely seen as a tool of Western power. When countries were cut off from SWIFT, particularly Russia in 2022, it sent a shockwave through the global financial system. The message was clear. If you rely on this system, you are vulnerable. So, nations started building alternatives. China's CIPS, Russia's SPFS, and other payment systems began to gain traction. SWIFT won't vanish overnight, but its monopoly is broken. It's becoming just one option among many. Since ESWIFT's revenue comes from transaction fees, this shift directly weakens its business model. More importantly, it weakens the dollar's grip. What does this mean for people holding dollars? It means a slow, steady loss of wealth. Imagine your dollar-denominated assets or treasury bonds. Your bank accounts facing a persistent 5 to 10% annual inflation. A bond paying 4% interest is a losing bet. If inflation and currency devaluation are eating away 7% of its value, this negative return forces investors to look for safer assets, which in turn accelerates the dollar's decline. For the average American consumer, this translates to a loss of purchasing power. The United States has a massive trade deficit, importing about $800 billion more than it exports each year. This is only possible because other countries are willing to accept dollars for their goods. When they stop, America will have to either export more or import less. The result? Fewer goods on the shelves, IIR, prices, and a lower standard of living. Those cheap Chinese goods, that cheap foreign oil, the affordable imports we've gotten used to, their prices could rise by 20 to 30% over the next decade as the dollar loses its reserve status. The timeline for this change is already in motion. We are witnessing a 5-stage pattern of backfire that started when the SWIFT weapon was deployed in 2022. We are currently in stage 4, where neutral countries are hedging their bets and diversifying away from the dollar. Stage 5, where the weapon loses its power, is already beginning. By 2030, the dollar's share of global reserves will likely fall to around 50%. By 2040, maybe even 40%. The US will still have the largest single currency share, but its era of dominance will be over. We're entering a multipolar currency world, and America's global influence will be diminished. Think about it. The SWIFT weapon looked incredibly powerful in February 2022. Russia was severed from the system. Its reserves were frozen, and maximum pressure was applied. But financial weapons are like nuclear weapons. Their real power is in the threat, not the use. Once you use them, everyone else starts building defenses. Russia built alternatives. China accelerated its own systems. The BRICS nations expanded. The petrodollar arrangement began to fracture. Now, the SWIFT weapon is effectively useless because any country America might target in the future is already prepared. America could have maintained its dollar dominance through economic strength and free trade. Instead, it chose to weaponize its financial system, using the dollar as a tool of coercion. This worked against smaller nations, but against a major power like Russia, it backfired catastrophically. And this backfire isn't just about Russia, it's systemic. Half the world is now actively moving away from the dollar system. History offers a chilling parallel. In 1914, Britain weaponized its financial power at the start of World War I. By 1944, it had lost its reserve currency status. America weaponized SWIFT in 2022. The pattern suggests America could lose its dollar dominance by 2042, or even sooner, because technology accelerates everything. This isn't just a prediction. It's pattern recognition. The dominant power believes it's using its ultimate leverage, but it's actually teaching the rest of the world how to become independent. The SWIFT weapon destroyed SWIFT's monopoly. The dollar weapon is destroying dollar hegemony, and the biggest beneficiary, China, the patient rival that simply watched as America dismantled its own advantages. China didn't need to defeat America militarily. America defeated itself. So, the post-dollar world isn't here just yet, but it's coming. The timeline is set, and the pattern is clear. The weaponization of SWIFT was the trigger. 20 years from now, historians will look back at February 2022 and say, that's the moment American financial dominance began to end. They just didn't know it at the time. Thanks for watching. If you found this analysis insightful,